On that note, yeah, I would say that's why everyone, depending on the state, but I know everyone for the federal side, you
Just
got
give me a minute.
one, sure, you have one, at least you can, you have access to your credit report at least once a year. Put it in the chat as this annualcreditreport.com. You can pull all your credit report and look at them and make sure there are no errors. Because that error thing is very tough. When you really, 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 really need it, that's when that thing shows up. So every year, make sure you check your credit report. And I've put it in here. It's annualcreditreport.com. And it's free once a year. Yo. Meeting I say, oh yeah, Ikaka.
Yes, please, you can go. You can go ahead.
Okay. Another one was about I'm say with the me I'm say friend zero credit and I say undetermined. I'm say you probably refrain undetermined score. That's whereby you have no credit history, no nothing. What are the challenges I'll be facing when it comes to that? Say if you're going to buy a house, what are the challenges I'll be facing?
I mean, it's the word zero means it has just define itself, right? So
Yes.
if you don't have a credit there, then most likely, even if you are going to even go co-sign a loan for somebody and you don't even have a, I've heard people calling me at the time, oh, yeah, even though you said my income is low, I have somebody, but they don't have credit. If you don't have credit, you can't even be a co-borrower to begin with, right?
Begin with, okay.
In cars is different. When it comes to certain things, it's different. Somebody can go to a dealership, come begin to work, they have zero credit, they go to dealership, and then somebody can co-sign for them. That one is allowed. But in mortgages, there's nothing like
That's not,
I don't have
yeah.
a credit. Whether you are number 10 or even on the application, you should always come with a credit. And speaking of credit, since you keep talking about it, I think unfortunately, even the Americans that we came to meet them now, a lot of people are ill equipped or they are illiterate in terms of even building their credit. Some, as a practice, financial practitioner, because you are into loans and all that, but come to realize that even in my immigrants community, I'm very proud of my people, not because I'm on this platform, compared to some of our other counterparts that were born here. We come and we learn the system so quickly that there's easy way to even begin to establish a credit. People don't take advantage, but we just want to encourage people. Say you don't have to even, apart from one established credit. One is to through how do you call secure credit, which is pretty much going to your bank. I don't have a credit. Take $500, $200, $100, transform into a credit card for me. Let me begin to use it. 6 months, 12 months, all lenders all over the world will begin to write to you. Or some of us who are blessed and we have young ones like our children. It's sad that you have, our 16, 17, 18 years going to college and they have zero credit because parents, they themselves, because finances, there are certain things that, in terms of finances, even people who do accounting, they teach them how to balance book. They don't teach them how to make money, even though they are accountants, right? So there are certain things that they don't teach them in school. And so
Pastor,
building
they are teaching you to go count the money. Wait, yeah, go make money yourself.
right. So establishing credit in this country is very easy, which is like I said, through one authorized user if you don't know anybody. But our children, young ones, our nephews, our nieces, co-workers, establishing credit, we our children, once some banks allow as young as 13, 14, 15, but most of them, I think 15 years. Yeah, man, all you do is, a good credit card, one or two. You put them as an authorized user, as young as they are. You tag them on it. And then before I realize that credit history now you've built for 5 years, 10 years, it just transferred to them. And before I realize Obana no on your no. His or her credit score is 700, 800 by tagging them on two authorized users. In addition, you open an authorized, how do you call unsecure credit for them, right? Because they are not working now. If you don't lenders will write to them, sometimes you can apply. They are not going to verify because you're going to use household income to help them. Or you can, in addition to that, say they also have a card in their name now. You go in, they do the secure credit for them. So I encourage, especially I man I mean I bless you with a man and name your fast for yeah. We have to tell people it's easy to establish credit. Say, oh, and there's nothing like, oh, me them impair credit. I hear people like that. Oh, for me, everything is cash and carry. Yes, you are blessed, but there's going to be somewhere, somehow, you are thinking that you have all the cash, but if you don't have credit, you are still overpaying. Like car insurance, they look at your credit scores. And your driving record is one of them, but your scores is being counted. So to you, you think so, oh, mini credit. Oh, and now my credit is a second I have my money. No, you are still paying somewhere. And these are some of the easiest way, and I think say your TF4 and so you bet to me I build your credit, and I say you bet to me I boy you more, especially the authorized user. And one thing I know recently there was individual somebody tagged him on two credit cards, and because of those credit cards has been in the system over 10 years, somebody who doesn't have any credit card at all, once those accounts were reported, his credit score, once they pull it by the lender, 780
Mm.
instantly, right within 30 days, from 0 to 780. And so that
Yeah,
is also,
many more requests say say amount for person me yeah credit score build it, how to build and all that. So you better one day for that too. You better I'll say say chairman for so how umbetimi build your own score. Na me nua kasa no kasa ubetimi ayɛ ɛno nkyɛ sɛ kɔhwe sika ne nyinaa because nipa bebree kɔ build a credit score mu na afei ɔbakɔ build a credit balance na afei ne tua yɛ den ɛnyɛ saa na ɔpɛ sɛ ɔkyerɛ because ɛyɛ good sɛ woyi sika but there are some nneɛma bi a wontumi wokɔtɔ fie na fie no ɛyɛ too much a wontumi ɛnyusu 600 500 ɛti ɛhia sɛ yɛbɛbuild saa de no ɛno nkyerɛ sɛ yɛma wo license say kɔhwe cash no nyinaa kɔgya basis
Nana Adebakwa.
kɔgya basis na yɛ shopping so ade
Adebakwa, people, it saddens my heart. Listen, it looks like a lot of people have not really come to appreciate the system that Nyamiada Roma, you and I have found ourselves in it to understand the system very well.
Yeah.
This credit, if you build it very, very well, no matter your income level, now it's like I said, it's not could use when you so, but you live. Everybody will see say Oscar, but unisika based on the system, right? When you look at even people who own businesses near there, not everybody is business minded, but this credit with just a little, savings that you have now, this you can tap into this credit system to elevate your life. It can make you richer if you know how to use this credit system. And this is when I see somebody sitting back and allowing themselves, oh, 1,000 mean few mana, oh, maybe a credit in the yes, intermediate pay creditor. I always said they are messing up. Even when the billionaires no crown. When you talk to them on the millionaires, they still have credit. Because some of them, what did they do? Instead of sometimes even using their own liquid now, they preserve some of the liquid and take loans. Because some of these loans, has some kind of benefit as a business individual, and they'll be able to write it off, or God forbid, if asemosia, the law allows them to go around it. Because so I was so sick now the koyadi, right? Nana, now will be a business. 1 million, now that could be a business. Now, God forbid, if the business collapses, If you don't have enough, depend on the circumstances that led to the collapse of your business, the insurance company is not going to come in to give you your $1 million. But if I have 1 million and I invest in half a million and I borrow another 1 million, 2 million, and the business collapses, well, there's a law in the country that allows me to say if my business collapses, I can go file for bankruptcy.
Yeah.
And if the court do investigation and say yes, business has collapsed, they give me a clean slate. The money get wiped away. The bank doesn't. I don't own the bank a penny, and I get a fresh touch. And so that's why when you look at no matter how rich people are in this country, they still take loans because they know that once these banks they go to say waboka and they're able to go to the court for the court forgive them, then the bank, and where did the bank get the money from? The bank took the money from the government. And so the bank also go to the bank and say, hey,
they reported as charge-offs,
charge-offs are right. And so please, we just want to encourage our people that let's take advantage of the system that the government has put in place. Beautiful. It helps you not in a sense of negativity, but it can improve your life, short-term and long life.
Yo, yembra back to your way so. Necessary say zero the no one is zero. There's it's tough for you to be able to move ahead with a zero credit score. So now let's come to the loans, right?
So let me chip in here. With a zero, no, in the mainstream lending, you are not going to get it because if we have some prime lenders, which is secondary market.
Secondary market.
Secondary market, yeah, yes, they'll be able
conforming loans and
yes, non-conforming, non-traditional,
non-traditional.
right? Okay. Those are the investors, and you have any hard money. We call it hard money, right? So that's what most of the foreign buyers they use. Like yes. You bring 30%, 40%, 50%. So in that case, if you don't have it there, then you have to have a hefty down payment.
Okay.
For this hard money to lend it to you. Because unlike conforming a government loan like USDA, FHA on a convention, you can do 100%. The only thing is that they tweak your rate a little bit, but it's still a standard loan. But if 0 there, then I would say we have to go to the non-conforming zone. Pacho, sorry, go ahead for me.
That side, say, oh, kakra, I say, you may actually hefty down payment from you.
So we need 0, so they make
it's a 1 year, which sometimes you might not be able to. For 250.
Oh, not necessarily be at 30% as most they ask.
Okay.
Right. But the average person doesn't have that money sitting in the account.
Sitting in the accounts. Okay. But I know said these loans, some of these loans, are government backed. You need to be somewhere else before you can get it. It be a nice chain biana. Say VA, because a VA loan, because we share the process of VA loan go through, no down payment, need those things. These loans may be a chain biana. Like I said, I know say, VA, there are people that qualify for VA. But at the same time, we want to know, say, loans may be a chain biana.
Well, I wouldn't say in a particular seminar, you're talking about advantages and disadvantages, right? When it comes to VA, the VA has a standard way. So with that one, we can't even factor it into our conversation. So now,
because you got to be in the military or a veteran before you can do that,
and
or
for them,
spouse or so
it's a special loan. So that one is excellent product and it's meant for them. Even Omicron say, ultimately, even help like VA funding fee. Sorry, 5% or 10% to us. The funding fee, I think, if you are using it, is 2.3. That's what the government charges them in order to give them those present terms. But 25% or more to us, those funding fee, you save some. Into no cramp, we discuss to us, I know they will not go into it.
I know discussion. Emphasis discuss. Discuss more to us here. You won't even pay that funding fee,
There's no absolute zero. With the 20% quarter, I said you're still going to pay. But the
Pay.
more money you put, it reduces
The
the
lesser
funding.
it is. Okay.
I know that when once you put 5%, oh yeah, 5%, I think it takes about a point of the funding fee off. It reduces your funding fee, by whopping measure. Which, if you have money, it's advisable to do that because the funding fee is going to the government pockets for free.
Mhm.
And if you are going to pay $20,000 in funding, let's say number 2 point something, so it's 500,000. You're talking about over $10,000 in funding fee, right?
Mhm.
Let's
Yeah.
say would it 5%. Now they are trying to say 25,000.
Now
Now,
be cover 5,000 mikro and I say 4,000.
be 10,000 before. So why don't you do that?
Yeah.
Invest your 20 and save yourself $10,000.
Yeah.
So into VNO car, you do it. But the disadvantage and advantages between FHA and conventional is that both loans, so who would talk fee 90-20%. Both loans requires um, mortgage insurance, which is called MI. And I said we refer it as PMI, private mortgage
PMI
insurance.
and MIP.
Yes, depend on how
Mhm.
we don't you say MI,
Mhm.
mortgage insurance.
Mortgage
So
insurance for FH.
both of them have mortgage insurance. However, on conventional loan, so yeah, it doesn't matter whether you are doing 100% or even 3% or 5%. Once over the years, you gain 20% equity in your home now. That mortgage insurance automatically, the bank stop taking it, or you can call them and say, hey, I believe I have 20% equity. They'll have to take it off. So
But
that is
they have to do insurance. They have to do appraisal first, or they just
sometimes they don't. Sometimes
oh, okay,
they
depending
look
on
at
the situation.
online based upon recent sales in the area. They are able to determine, say, oh yeah, you bought a home since then you've gained 50,000, 70, 80,000, and when they factor into your current how much you own them, you have more than 20%. So they take it out.
Mhm.
The only time appraiser comes in if they are in doubt, right? Say you have 20% equity in it. Then they have to order appraiser for you, the consumer need to pay.
Mhm.
Um, so that is one of the beautiful things about conventional loans. So the MI is temporal. One of the beautiful things about conventional loan also is that uh, FHA has hard. It has upfront fees, whereas
Mhm.
conventional loan doesn't have any upfront fees.
Upfront fee.
So conventional, you save those upfront fee too. The MI is sent to come off in a future date.
Mhm.
However, on the FHA, in order for the MI to come off at certain point, you need to put 10% down to begin with. And sana, and no the MI need to stay on your loan for 11 good years
7 years. That's what I
for
know.
before the MI can come off. But other than that, if you do the standard 3%, then the MI stays with the loan forever. Or at a certain point, depending on your situation, if credit scores was low, that's what led you to do conventional FHA, or whether because of DTI, somebody I know people who have excellent credit scores, but because of DTI, they
DTI.
end up doing FHA. The reason being, you and I can make the same amount of money, but conventional loan will give you less money
Mm.
because of the amount of ratio that conventional allow versus higher credit score. Conventional can even allow over 50 DTI, whereas FHA conventional, the highest you can do is 49% for DTI. Most standard is 45%. Even some of this
It's
first time,
41. Yeah, let me
yes,
see.
some of this
41,
first time
43.
program they cap it at 43. And some people are being forced into conventional, not necessarily that their scores are fair, but because of the purchasing power. So
Mhm.
at that point, once you pay down your mortgage or rate drop, then you refinance your conventional loan. So that is one of the disadvantages that is between the two, is that the FHA, you have the upfront fee, which is 1.75 of your loan balance. And then the MI also doesn't go away if you don't put down 10%. So Those are the two distinct, you know, advantage and disadvantage between the two loans. But other than that, um, if your situation doesn't allow you, your credit scores are low, and you want to buy a home, the fact that FHA is charging you upfront fee shouldn't stop you from buying your home because you are still building the equity. And especially in this environment where interest rate has been elevated more than some of us would like it to be, you know, say along the way, 2 years from now, when rate drop, you are going to refinance it. And once you begin to pay mortgage alongside 6 months down the road, your credit score is going to go up and you'll be able to turn around and push yourself into conventional.
Yo, for those of us now, I can DTI and DTI debt to income ratio. Now, so what I say, debt to income ratio. So with data, it will be on my the credit score is good by the debt is too much, and then also compare the debt and the income now, it's too much, and also you be a hard drink because you might have a good credit score, by fiscal will make you any car dear. See a mouth die come on here and I know can DTI. Yeah. Yo, I'm say yeah yes, sister back also a question my or say is there a strategy to pay your 30 years mortgage within 15 years? Video my sister strategy no saying and I say
Oh, no, no, you can chime in and I'll also continue from there.
yo a strategy they say emphasis say 2004 right emphasis dying at 300,000 that's a 2000 emphasis 2004 and they make you 2004 maybe 30 years I believe say what the best 600 can a bit me cutting into 15 years or you can calculate it wait me calculating so if you really want to pay a year it'll be almost a refinance it to 15%. So refinancing a year for interest rate in a bed wow then an interest rate in crack for so check it say a friend saying whatever a car ball because sometimes if you have a car close any other no now it doesn't even make sense so refinance it but the minimum say utuyes come more come and the idea until you can check it right so then make an example say if I'm paying 2,400 for 30 years I know some of the 15 your friends say 600 and 800 come extra now but by 15 years meet me a cherry we are just on top of my head but so we'll check this out will be to me didn't be yeah I'm say kakra me mekano
Yes, to you said the right thing. One of the easiest way is when you push in, you make two extra payments. So instead of making 12 months, you
can make
specifically send
40
it to make it 14. And those ones, if you are doing that, once the infant say November, you be removed November call. And then 3-4 days later, you send in extra month payment and then specifically say apply it to the principal
the
only.
principal
And with that one also, once you do that, from 30 years, you bring it to 16 years, which is almost close to your 15 years loan.
15 years yeah I hope say say what new way I'll bet me more the miss me who about the if I say any Alex can yeah na good but nipa be bring me nyɛ saa de no nti na ebi wɔ ma amanfo kɔ by week no because obi wɔ no ma wotimi tua 1 month bi no asɛ tua extra month yeah but saa nneɛma no nyinaa nyɛ sɛ wo yɛ na wo yɛ no just simple you have to make yɛ so mo yɛ aware but these days crowd the MC most of these companies no more online and it's easy sell because oh yeah or apply yeah option no to apply to the principal money
Yes, yes, sometimes yes.
yeah
Set it up, I give you the option. Because the big amount is also working. But the thing is that if you add it to it, most lenders now automatically no, they know because your interest rate are accrued on a daily basis. So mortgage 2.5 now the 28 qua automatically they are only going to deduct whatever the interest has accrued for the month, and automatically no, they roll it into your principal for you.
So first no month yes how.
Now said of me, I like
And
me
I
personally,
say
sometimes I do it and I don't even specify automatically. A month I meet me and they come home.
what they come
Everybody
on.
now they said $200 now 100 a call principal.
Yeah. And I'm say na can say amount for say there are so many things going on online, people talking about you take line of credit, you pay it back. Yeah, it's an amount for bisa say, what I've realized is say by idea say when it comes to mortgage paying your mortgage in and when you want to pay something off, would you seek extra to swa off? So our strategy na yakoji obi nipa be 4 or 5 a frame or sad within last 2 months say na sa equity line na okoji na de atua ofie off no to say too complicated e be adwuma de but just what the stress grade was sad no that way I see do paycheck nya be kwakotum then it's like you have to pay everything from that then I would do sika na obinya too much too complications the mpɛ ma woyɛ ne sɛ ɛpɛ sɛ wɔacalculate biribi no ho hwɛ any mortgage calculator right wokɔ my website called Patrick Solutions a mortgage calculator wɔ hɔ no wobɛtumi acalculate ɛka na me ne obi yɛ baako bi sɛ yɛ calculate bro you won't believe say ɔse lunch wondi lunch ɔkɔ adwuma mu wondi ɔmfa aduane bɛkɔ na ɔtɔ lunch ɔsɛ ɔtɔ $7 nti yɛkyɛke $7 ɔse okay saa na ɔbɛyɛ no ɔde $7 bɛto ne lunch ne mortgage instead nti no ɔkɔ adwuma 5 days 7 times 5 is 35 right nti yɛhwɛ 35 no 35 times 4 35 times 4 you say it's in probably 140 you say
so 35 what you want to do is say multiply the 35 no if it's a weekly basis multiplied by 52 weeks that will give you annually because we are
52 weeks say 7 days but it's okay it's okay
yes there is on a week so I say 5 days no told me and we are just taking the 5 days in each week
okay to we can 1680 you check is 1680 in a year no within your friends and knocking it off $5 $7 in a day no you check here no then knock it off them say 4.9 of the mortgage of 4.9 years. Yeah, 4.9 years. No, any idea extra BBM so can who am no pa and a coffee near the other. 80 no. As I say, as a yearly crabiano or apply by 3,000. It was almost getting to the 15%, 15 years in clock. It wasn't quite dead though, but it was and it depends on that. It depend on how much you paying. So mortgage you pay 4,000-5,000. We so say 3,000 in but so be a mortgage loan almost starting time will be on 300,000 which you pay 1,200 near there. Imagine say we 1,200 and 1,500 a month. No, the extra 3,000 come in any baby we will cry 15 entry. Kakra mechanic say oba make sure say you are paying something. More the more would you go and they reduce to make sure so the kind of principle also. And yet say these days the and as say when we cry now say they can these days no more apply near money be breed that already. Germany in your day. Yo, MC ever call back to a time no call by MC call. If I say thank you to MC question no ye. Be a look, person okasa, look person okasa na what question be at the bar and I say
but my name question be I'm just
question be
yeah,
yo.
yeah.
Okay. yɛyi baako wɔ hanom. Obi say escrow no, escrow account no. To a man, but we between elaborate account on escrow when it comes to escrow account.
Yo, no, that's a very good question. Escrow account is just a simple, we call it reserve, right? So
Mm-hmm.
to your payment is your payment na a PITTI,
Mm-hmm.
right?
Yeah.
Into what you are a because principal, a because interest, a because taxes,
Mm-hmm.
and a because called escrow account,
Escrow.
right? Into escrow no happen is a and no basically no nyama mienu and a who to for be apart from closing costs, the fee no is grouped into two. We have your prepays, which is the escrows, and
Mm-hmm.
then you have your closing cost, which is all the other fees. Some of them can be low as $10, like warrant fee. Into auto fee for now escrow no one more ABR will hazard insurance no ABR na yearly no we quote na 1,200 a year. And
Mm-hmm.
it depend on when I will close now. Apart from some ultra first 1 year if you na you better just cut to where because you establish escrow account. Into escrow account no yes ABR or hazard insurance no yeah just 6 months. And our property tax and so if I say $10,000 a year. I'm just using 10,000 for discussion. Into
Mm-hmm.
no so no if I say okay, you say 12,000 a year. You chain no and also so no who yeah just 6 months of property taxes to establish the escrow. Tiano nti ne yagye wɔ no so 6,000. Ne yagye wo insurance no so 600. Nti bo se ya establish 6,600. Nti busom bia nso a obetua wo mortgage ne kana ye 10,000 ɛno na ye taxes ne de akoka escrow account no. Ne ya $100 ɛno nso for hazard insurance ne de akoto.
How's that? Yeah.
Ti escrow account ne no ano no na ɛwɔ ha 6 months na makotua county nika ɛwɔ property taxes.
Mm-hmm.
Another 6 months so makotua. 1 year free time I close with you know. When insurance ne expire pay na ɔmo ayɛ dɛ ɔmo akotua ne nyinaa de ama ɔmo. Ɔmo akotua ne nyinaa ama ɔmo one time. That
Mm-hmm.
is just that on the hazard insurance into and only escrow account. But the woman said this escrow account is subjected to review annually, no, from time to time. Your mortgage company will review. That is where I think a lot of people they've been having a problem, right? Because people ask me, hey, Alex Mitofia, if I buy a home, am I going to ever see increment in my payment? I say yes and no. No, because your interest is fixed. So your principal and interest you are paying for the life of this loan, you are not going to see any changes, especially
Right.
if it's not adjustable rate. However, you can get an increment based on this escrow business. Because if the county increase your property taxes, well, the lender is just a collector. He has to increase your property taxes too. If nowadays, unfortunately, the whole United States, the insurance company, whether good or bad, they've decided to raise everybody insurance premium from cars to homes.
Mm-hmm.
And when it happens, this escrow and I say your mortgage company will try to review your escrow. And at a point, I going some review net. I say what short. Into short to either they write to say, hey, Alex, our escrow has gone down by maybe 600, $800. You can pay us one time, or we're going to spread over 11, 10 months or 1 year period. If the escrow no shortage came as a result of increment in any of the two things na makana, either your property taxes or your insurance now, that one utuya escrow short na your payment is not going to revert to the original payment. The
Mm-hmm.
increment abano going forward looking no or so they can mortgage home. And that is what the escrow means and what escrow does. So that when your payment goes up, you know say it's one of these reasons that has affected your mortgage payment.
Mm. Yo, on that note, them say a paradigm shift program na on Wednesdays, no. So open say joining now, you have to join the Patrick Buffy channel, YouTube channel, and that's the Facebook. A bit I'm watching me join Wednesdays paradigm shift. Yo, you know, I call. I'm saying uncle send me bisa we crans. I'm say time na yakona. Person bisa we quick. There was a question about. Sometimes you can't APR, you see interest rate. Who difference? What's the APR and the interest rate? Is it?
Yes, there are two different things. So normally, no, you're always going to realize that your interest rate is going to be higher than the APR. If you pay out of your 20% to us here, 99.9, your interest rate should be equal to your APR because you don't have any mortgage insurance. So normally, what makes the difference between APR interest rate is your interest rate would you interest for mortgage now and only with interest rate. But the APR comes in when there's a mortgage insurance.
Insurance.
So the mortgage insurance difference, not like where we rate near, and then 7%, and you see 7 point maybe 125, 7.25 APR is whatever the mortgage insurance
The
now
difference, no.
and no normal factor in into between your prime rate and then the mortgage insurance difference, no, and no is where your APR no comes in. Into the APR no always has to do with the mortgage insurance differential na wutu account no, and normal calculated into interest rate. In your mind, it's okay. This is your prime interest rate, but at the bottom is factored in the mortgage insurance that you are going to be paying.
Yo, I'm say in your number I'm there to soon. Alex Adumako champion the number in the hono. Said the mechano or being ye when it about a dine to or see we hear question be a friend. You cry the wama free in yes casimbia with the we hear question be when it comes to down one friend or the boy what you have to so why. Yo, when you last one into snaffy, you head a bay. In same be when it comes to your todd and say it will crana, you probably be a start to see a plan here. You fast the way in come here. This way here pa obisi closing cost. Yeah, fata. In fact, craft. It had those besides closing cost. Closing cost, bay. Tino, train closing cost. Yeah, and they quite be fast boy and they say, here say. Before say be address here to crown and yet down payment no kwa the mum here closing cost.
Yo, and I thank you so much. That's a very important one. So closing costs, who pay for closing costs? That's the question. Closing costs is always the responsibility of the buyer, right? It's just like you going to any other going anywhere to buy or to a service being rendered, you pay your taxes. If you go to car dealership and you pay car, who pay for your taxes? Is that you, the consumer?
Yeah.
Who pay for the tag and taxes and processing fee? It's you, the consumer. Same thing applies to a home, right? So always you are responsible. But in the past, or even still, it's still there. It has become a generous gesture. Say when sellers lived in a home for a years and they are selling their home and they are making equity because of say they are making profit, it has become a practice when we write contractor, we put in a closing cost, asking the seller and say he should help you, the buyer, no, to pay for you. I think it has become something. It has become more like not a norm, but very very common out there. And I say a lot of people even when people are going to buy home, they don't even talk about it. And I myself been sitting as agent in years ago. When people call me from consultation, I talk about closing costs, but most of the time I point to say, 99.9, we're going to have a seller, paying for you. Until COVID hit, when there's a shortage of home, now people are even outbidding each other. So we become one. I think I could be a closing cost. Into closing cost is also important, and typically, depending on when you are closing in terms of the law, in Virginia, Typical closing cost is anywhere between 2.5% to 3%. Is the max I've seen, unless whereby you are buying down the rate, then it goes past three. In Maryland, the average closing cost in Maryland is 4%. It can also push you to 6%. So that is in terms of amount that costs one in terms of closing cost. So typically, a 400,000 home, if we go for the lower closing cost in Virginia, then you're talking about $10,000 in addition to your down payment.
Okay. I'm say MB Bisa question was please, are there any benefit for making auto payments for mortgage, automatic payment for mortgage? It's advantage in the M say so yeah, I said you are not missing payment, you know. And
Yes.
yeah,
Uh, yeah, they don't give you discount. Unlike, I know, sir.
other companies do for different things. If you want say automatic, you know, I mean, I'm say phone companies in the internet, you know,
Yes, yes. Phone
you can get a
companies,
discount yeah there.
you
But
get this.
mortgage there, you
Mhm.
won't get it that way. It's just you know, can say me refi because why in auto already. Eh, yeah. So will be any question be the name say bɛhwɛ na ya bobɔ so meba pay ni number na masade ato hɔ yo eti em say na baabi a yɛde bɛduru ani yɛnua ama yɛ ahi bebree but before sɛ wobɛkɔ koraa no na mede me deɛ bɛto ase no what is the state of home ɛwɔ yɛmfa no sɛ what is the situation right now when it comes to buying home or selling a home right now ne ɛndi nkɔmmɔ kakra ma yɛbibi kakra nsa na yɛakɔ.
Yo, many amedasi. I mean, the current state of the U.S. housing market, we say it's stable. Uh,
Mhm,
right. For those people who are homeowners, cheers, home prices is where it need to be. Is going up gradually. Selling your home depending on your zip code. When it's sellers market still, sellers ride the market, but
mhm,
depending on certain zip code, it's kind of now it's a balanced market, which means now buyers also have a say in it. Or in the past, you couldn't say metiso, but now depending on if you're in a zip code, some home
baabi
are
a wɔ.
on the market for days. In that case, you'll be able to negotiate on the price here and there. So I would say current state of the U.S. market, the foundation is very strong in terms of homeowners, but depending on the zip code, buyers also are beginning to have upper hand or even in terms of negotiation and asking for closing costs and so on and so forth. But generally speaking, now in terms of supplier in Northeast, which include this DMV area, there's a lot of you know supply issue that we are
Mhm,
dealing with. Uh, I think it has to do the fact that there are more buyers than homes that are available, and also the super ultra low interest rate that people have enjoyed. People are also holding on to it. They don't want to trade in for the current interest rate. So, if you ask me, that is where I will put it. Say currently, no, that is where the housing market is. But at the end of the day, there's something for everybody in terms of the housing market.
yo I'm say yɛnua I'm say why late but questions will be said or say two questions bɛma no wahwɛ sɛ I say why don't mortgage companies accept credit card for payment hey sister also pɛ sɛ wokɔtwi dan wɔ all right the next one say I'll say why do lenders require the borrower to pay their title insurance for the lender title insurance yeah, for lender why would you wanna
Mhm. So,
eh yo
so
first say I did that for your credit card for a mortgage.
yes, the reason being is that they don't want you to start with now. Ukotofie now only
Mm-hmm.
down payment. Uko borrow. Untumi kwaje personal loan farmer. Oba umbedi now
Yeah,
because you can't borrow to pay borrow.
yeah. They
And
have
so
to make
credit
sure that
card.
is your own money.
So credit cards is the same thing. They're assuming that you are borrowing Yes, so when actually let's say the will cash out, or
Our
the cash
credit
in
no more.
advance.
Koyibra.
Yeah, cash in advance. Yeah, you
Yeah.
can transfer the cash advance to
And
your
it's
other account.
interesting and you good and you easy.
Use maybe as a maybe obey late, right? I'll
Yeah.
be a late payment or delinquent.
I bet you wait
Versus
now they what they are sir.
yeah, versus say, oh, my check is around the corner and
Mm-hmm.
clear. And a beban any 15th. Me loan me mortgage due 15th. Me so no me seek a be a me train no a beba 14th. And my credit card enough. Okay, let me take the money, pay them so I don't run late. A buy I pay them the money I come out because
Mm-hmm.
remember say credit card no so what you need for won't your interest.
Mm-hmm.
And sadia but they don't want you to borrow borrow business and to your mocha. So that's the main uh reason why they don't want you to do that. And the second one has to do with
Title insurance. And they may feel say wow dear and yet
no.
the lender there.
So the only panic can so any initial purchase is not ongoing, right?
Mhm.
So we have two kind of title insurance. There's lender's title insurance and there's owner's title insurance. And
Okay.
the owner's one no is always is optional, but the lender's one is not optional. And if it's not optional, then everybody pays it. And I think that's where Aminiano, he or she is not happy that when you buy a home, the bank want you to pay for their title insurance and all that. But
Okay.
unfortunately, anything that they're asking you, the government has signed up on it.
It's in your
Unfortunately,
direct from yes rules no.
yes,
And more mortgages rules no more no. And
yep,
yes I don't know.
they allow them
Oh,
to
so
get
the lender insurance no. Any your friend say who the buyer and insurance no. And yet the same.
no, they are not the same, but it does the same thing, right? All that it does, owner's title, lender's title, does is that it's just in case uh, after you've purchased the home, somebody should come back, or if there should be any lien,
Yeah,
right?
lane and BBS
Yes,
and
if any lien pop up, that document, it's like you are buying insurance. That's what insurance. Until that document become uh, the title companies have attorneys they will fight for you in court
in court in case of any.
in case of any lien. That's what it does, right?
Okay, into this case no. Sɛ mema anto bi lender ne toe na memetua. Na sɛ mema anto me deɛ na na sɛ if somebody comes back and say say ebi efie no lane bi wɔ so a nti deɛ na we sɛnea still no the lender no deɛ no ɔtɔɛ no ɔmo deɛ no bɛ fight ana no ɔmo de bɛ fight for
Yes,
ɔmo bi
yeah,
ɔmo sika aka na
yes,
wɔso deɛ no aka deɛ ɛbɛsi mu ana.
yes. That's so. It's funny that it does the same thing interchangeably. Why they charge twice, you know? But um, but those kind of lanes, Ninyan is subjective to
Yeah,
whether do I really need it or I don't need it, right? In some cases, you might need it. In some cases, you don't. It
really?
really depends
If
on.
you don't,
Well, I mean,
cases
that's
bɛn sa mama example.
your agent and all that. I mean,
Uh,
there are certain things I say in terms of talking point. I cannot say it on this program,
okay, got you,
but it's all case by case.
Mhm.
Mhm.
Wow, wow. Okay, me de biara mfi sɛ wɔ sɛ ɛho hia sɛ wɔ sɛ onya because nana na mfi sɛ wei deɛ ayi bae sɛne ɛsi te bia ma obu mfu gye sɛ wohia deɛ medeɛ mese begye mɛnka sɛ lenders no agye ɔmu deɛ nti wo so gye wo deɛ wotua mmienu no ɛnyɛ hwee ɛyɛ wonu sɛ ha
No,
de
but it's
wogyina
one time fee though, and you're
one
recurring.
time ɔnya recurring okay
No, no, no. It's just one time fee.
because mentua biribi atu saa da
No, 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 no. It's a
Mhm.
recurring, and a lot of people, depend on your knowledge level or your realtor, most people they break down. No, they don't even know what is that and what is that. So, a lot of buyers have paid it without even knowing. Say, they had opportunity to back out of it. So, in this case, this individual has done his or her own research. If
Mhm.
they are buying or they bought already that they weren't happy. Say, why do they have to pay it? But
I'm so a tree when chat.
mhm.
But when you're any be a team see. Yo, I say, yeah, bet and they were ha. Yeah, this is BBI every month, yeah, once a month, usually the third or fourth week. Usually, I will say third week, but yeah, Bruce Nyamanako fourth week. I'm the last 2 months here, and fourth week. But whatever it is, near more advances. And then, every Monday, BI will have you can see them. Yeah, you see them Juma, Monday to Friday. Sorry, every Monday, be 7 to 9 p.m. Now, the third week, and the fourth week, in the for housing, and you can want them. On that note, said in America, a paradigm shift show no sɛ wopɛ sɛ wojoin in a very very good show wopɛ sɛ wojoin in you have to join this channel to be able to get in wobɛtumi ahwɛ bi whereby you're talking to people ɛne nkurɔfoɔ a ɔmanya information a ɛtumi achange ɔm adwen mostly nkurɔfoɔ a ɔmowɔ Ghana nipa bebree te hɔ sɛ adwuma ni hɔ so ɔmode ɔmatumi anya ebi koraa start with money ɛna ɛnyɛ nkwa bi ɔmo te aso a move kɔ Ghana ebi koraa kɔ na ɔmo amfa sika ankɔ nso ɔmo kɔ ya baako deɛ bro baako oduri ya no kɔtɔ ɔsi ɔba abusuafoɔ sɛ mɛma sɛ hwɛ mɛba ne ma so ba na biduru abihu tuduru akasa oduri ya so kɔ market na so kɔ market kɔ yɛ deɛ ɔsi ɛna kɔtɔ ice cream ayi ɛfrɛ sɛ kinkin na so ɔna bɛ ice cream kinam starting sɛ mɛtɔn ɛbi sɛ ɛyi ɔsi yɛ ɔstarting sɛ ɔtɔn ana started no one or the started to ice cream for seeing for free no almost sorry for I didn't also the no quite sorry because we bought them a bomb paya one I feel almost no one I feel on banach be a wedge I feel the boss who my kaka current to be in the stores near the way. So if you want to join that we'll join this channel Wednesdays every Wednesday US time US time 4 to 5 p.m. on Wednesdays. Yo, onto that, say, hold on, it's another question. Yo, say your contribution, your match. Says the best if you have a mortgage in overseas. Spend the rest of your life in overseas. In who the training you buy. Next time, no abandon. Let me see a time na son. You onto that note, man. Make sure you spend wisely, save intentionally. Now, be generous. I said the American. I said the American. You might be wrong, maybe when it comes to dying the PCB financially. You know, say be a plan at home. You are terrible. And when you're professional, not me about. You know. So meet again. Hala. See you next week. I saw next day. Yep.